All right, so we are live. So it's still a minute to go. So we're kind of early, but just wanted to get kind of started here. Let's see how many people join. If you're from Theta Traders, let us know in the comments. Just say hello, say we are. Already see David Silberman here. Awesome. See Randy here, which is great too. So yeah, familiar names. It's always good. See people starting to come in now. So yeah, tonight's going to be interesting. So we've basically come up with this idea of talking about Lance's new strategy, right? So really, hey Tom, how's it going? Yeah, so it's exciting. There might be some confusion though. So there's people in Sidekick Traders that are going to be joining, and there's some people from Facebook and some other places, some subscribers to the YouTube channel, and so we're trying to figure out, make sure everybody knows that we're on the same page here. That we're going to be talking about Lance's new iron butterfly strategy in particular, but we do hope that we're going to have time to talk about other things as well. So for you guys that are in Sidekick, we'll probably have some questions towards the end about some of the SPX stuff, but the real focus is going to be on selling options tonight. And I think it's been a while since we did one of these, right?
Yeah, been a few months, and this new strategy is really eye-opening to me. I think it's going to work out really good. Already based on previous data, it's looking great.
Yeah, definitely pretty good, pretty good. So yeah, let's just wait for people to come in. Say hi, guys. Tell us where you're from. I know there'll be so many different people coming from different basic communities that have split off from the main Facebook group. So Theta Traders people will be probably pretty interested in this webinar tonight, because I have to say, I think it's quite an advanced topic, right? Like iron butterflies for the average trader is probably going to be a fairly unique topic, right?
It's a little bit different. When we break it down, it's actually pretty straightforward, and it's very similar to like an iron condor that we do already. We just do different strikes. So what's interesting about options is you really only could do four different possibilities. You buy or you sell, and then you do calls or puts. So where you put these calls or puts and where you sell or buy them will make different risk return graphs that are usually optimal for different people in their risk tolerance. So some people might be more willing to take a little bit more risk, so then they could do one strategy. This strategy we'll be talking about will be a little bit riskier, but there are more potential returns. A lot of what we do in Theta Traders is just safer 2 to 5% a month trades. These trades will have a few losses that might be bigger than that, but the wins will be much bigger than the 2 to 5%. And I'll show you exactly what we mean by that when we get there.
Yeah, and so we have our presentations, PowerPoint slides, but we have plenty of time for questions tonight. So if you come up with a question, just let us know. I'll keep an eye on the comments and the questions. And Lance is going to talk about the expected move, which is something that's relevant to all of options trading, but we're really putting it towards more. Hey, Clayton, how's it going? Yeah, we're putting it towards more of a flair of the options sell side, but this is something that people use on the buy side as well, right?
Oh yeah, it's very useful for pretty much any stock, any futures account, and we're doing these in both options and futures. It's very useful for looking at where a possible stock would be. It can even be used for just buy and hold. So if you're holding a certain stock and you want to see a possibility of where the stock might enter in a certain time frame, the expected move does give some reasonable percentages that it might actually reach those points. Yeah. So it could even be used for buy side if you wanted to. But we are focusing mostly on the sell side today, though.
Cool. Yeah, hopefully there'll be plenty of time for questions. Hey, Isaac, I notice you come from Sidekick Traders. So I mentioned that we aren't focusing on Goldman scalping tonight, although I know a lot of people are having a lot of fun and making a lot of money doing that. But we are hoping to kind of go towards, like, what do you do with your profits, right? So you're scalping SPX, you're making $1,000 a day, best case scenario, right? And then what do you want to do with that money? And one of the big things is that Lance has discovered over the years is to start selling options on it, right? So conservative, long-term, like protect your gains, high probability wins. And so that's something that Theta Trader members already know, right? Like these guys are doing it all day, every day. But a lot of the Sidekick Trader guys are new to it. And I think it's something that's worth considering. It's something that I'm focusing more on, especially over this next year, is taking the gains from the buy side of options and putting them into like just chilling out, like doing these spreads, doing these like cash secured puts and things. So it could be something that if you're not used to or know much about, this webinar might help you a bit. So Lance, why don't you just tell a few people, I know a lot of people from Theta know who you are already, but there's plenty of people in Sidekick that don't know your full extent of like how much option selling you've done and that you focused mainly on that. So it'd be pretty cool to get like an introduction from you about basically like what you have done over the last few years in terms of option selling, like, as an introduction?
Yeah, sounds good. So I'm actually a high school science teacher on the day job. Some of you guys will see, like, I do teacher references from the side. I've been teaching over 16 years now, but I've been constantly investing. I did a lot of buy and hold when I first started out in my like early 20s, maxing out my Roth IRA, which I continue to do now. And I did build up the accounts pretty well and just long-term buy and hold, especially in like the early 2000s and 2010 to 15 area. Able to do pretty good in growing the account. And then I wanted to find ways that I could safely just grow those accounts pretty steadily. And what I've actually noticed with selling options is you could not only do those things, but you could do them and make it grow just as much, if not more, than buy and hold strategies. So a lot of times, if you're looking at, say, SPY, and you just buy one share in the beginning of the year, hold it to the end of the year, the average is about 8-9% of growth of there. But by selling options, we could easily double those in very highly probable trades. Now, not every trade will work out, but a large majority, about 85-90% of the trades, will work in our favor. And if you're able to manage them correctly, limit your losses, take your gains and put them into new positions and cycle them in, have your buying power constantly working for you. It's a very profitable strategy. And that's why a lot of my accounts are in these sell side of the options. I do some buy and hold, and I do some of the sidekick like 0DTE buying options. But a lot of the times when I get the gains on those, I like to park them in a place where I'm pretty confident that it's going to be a consistent growth on that account. It's almost like you're running a big business and you're doing really well in it. You might want to put some money on the side that lets it grow on their own. Companies do this all the time too. If you look at, say, Coca-Cola, they're making a lot of money selling their drinks, and then they decide they're going to pay out dividends to their shareholders. So it's another avenue where they could go, where the other members and like stockholders in that case would be happy because they're getting those consistent checks every 3 months, every month, like certain stocks do. But what's good about selling options, you could do this stuff and you could make money every day if you want. You could do weekly, you could do monthly. I have different time frames and different strategies that I do. Some of them I'll even sell options out 6 months and then just wait for that pretty good return. That's usually higher than just buy and hold and things like that.
Yeah, definitely. And it's Warren Buffett's strategy, right? So he's famous for the Coca-Cola thing, right? Selling cash secured puts and Coke. And so, well, let's get started. Let's start the presentation. Do you want to share your screen and we can talk about this? It's a fairly advanced strategy if you're new to it, but I just shared the link in the comments here about like the very basic stuff. So if you're not sure what selling options is all about, hopefully you can get some help from that course that I just shared in the comments here. The how to win 90% of your trades in 90 seconds. A little bit of a clickbaity title, right? But it's true. You can learn how to do it in 90 seconds. All the details, though, the devil's in the details, right? So things like what we're talking about tonight come into this whole strategy. So I'm going to put up Lance's presentation here about the expected move and iron butterflies, and we can go. There'll be periods where we can talk about questions and things, and let's just get started though. Let's get into the meat of this.
Yep, there'll be rooms for questions in the presentation. So if you have a quick question that's involving that certain slide, let me know. If not, we can take little breaks as well. Do you guys see the main screen? What is expected move?
I can see it. Yep, looks good.
All right. So in case you don't know, I run Theta Traders with a Z.com, and we do sell side option strategies, do many different strategies and time frames. And I'm going to teach you guys, because I'm a science teacher, we're going to learn quite a bit today as well on what the expected move is and how you could actually benefit selling options based on knowing what the expected move is. So the term expected move in options refers to the anticipated, that's a key word there because it's not definite, but it's a good probability of anticipation of a range of price movements for that underlying asset. Now, this could be any stock, any futures account, it could even be commodities. We've been selling on corn and soybeans and gold and oil. So pretty much any type of security will have a predicted range of where it's going to be in a certain time frame. So this is estimated using statistical models, use the Black-Scholes model and other models that look at implied volatility and how much the range of that particular security could move. Okay? So the expected move is the potential price range over that particular time horizon. So the expected percentage change, and you'll see this in Thinkorswim, and I'll show you guys actually how to find it. And it'll usually give you the actual number of the strike price. So for instance, if the stock's at $100 a share, it might say the expected move is 8. What that means is there's a very good probability that it's going to move either up 8 or down 8 in that specified time frame. Okay? So you might have noticed this in the back of my screen when we were talking before. This is a Gaussian distribution, and you see this in a lot of different cases. I see this when I'm giving tests out to my students. So if you're looking at a large sample size, let's say you had 100 students, some of the students will do really, really well and get their 100 on their test. Some students will completely bomb because they didn't listen to me or listen to the teacher. But you're going to get a large majority of the actual test scores within a certain designated range. Right on the top is essentially the average of all the scores. And then you see this time and time again, not only in test scores, but in stock prices, where you're going to have a range of a large amount. In this case, it's 34.1 in one side, 34.1 on the other side. So about a 68% chance that it's going to be within this one range. And this is called a standard deviation. You might have heard of that in statistics and in other avenues in math and whatnot, right? So what these actual red lines represent is the expected move in that underlying asset within that time frame. Does that make sense?
Yep. I love Gaussians, being a physicist from the past.
Oh, yeah. See that all the time. Pascal's triangle comes back in pretty much every avenue. I even have this little tool that you flip over and the little marbles fall down. And every time it falls down in the same distribution, pretty much, right? When we're doing theta trader sell side strategies, we tend to look usually near the second standard deviation in a lot of cases. This will be 34 plus about 13.6. So we're looking at what, 49, about 50% or so. Pretty much all of the range of values will be within 2 standard deviations. But if you're able to sell options in this general area, there's a very highly probable chance that the stock wouldn't go from the middle of the graph all the way down there, right? And that's how we win about 90% of our trades, because we take trades that are really far away, but also get a good return based on the risk that we're taking. What we're going to focus on in this is taking trades near these red lines. Now, in these red lines, you're going to be making more money on these trades because there is a slightly higher chance that it could get near or a little bit below these specific levels, but the percentages are still on our side, and we're able to profit in bigger returns for the given amount of risk that we're taking. Okay? Have any general questions from the group? I'll leave it up for a little bit.
So far, nothing. Yeah, no real questions at the moment.
Okay, Russell, do you have any so far? You good?
Nope, I'm good.
Oh, us physics. I teach physics as well. We already know our Gaussian distributions pretty well, I guess. But anyone else that's watching in the chat, feel free to ask any questions. That's why we're here to help. I'm a teacher first, and like to be able to not only cover any misconceptions you have, but also be able to learn something today, right?
Yep.
So what changes the expected move? What's causing this bell curve to have specific lines between it, okay? If you look at a very stable stock that doesn't move very much, Coca-Cola is a good example of that, you're going to have a pretty narrow band between these two levels, because the stock price of Coca-Cola typically won't dramatically move up or dramatically move down in a short time frame, right? So you could imagine a curve being much more skinnier, kind of how I'm drawing right here, right? Now, if you look at, say, a meme stock like AMC that could make dramatic moves, it could be up 20%, down 20% the next day, you're going to have a much wider curve because there's going to be a greater chance of a certain price being either above or below that average. That's going to be a wider range than it is in a more stable stock, right? The time left for that option to expire also matters quite a bit. Obviously, if there's only 1 day left, there's going to be a very narrow range, almost like that Coca-Cola graph, where you're not going to have much probability going really far away from the current price. But if we're looking at, say, SPY in a whole year from now, SPY could be down about 20% like it was last year. It could be up 15, 20% the year before. So that means you're going to have a much wider bar if you have more time before that option expires, right? Implied volatility is what I kind of mentioned before. AMC is a much more higher implied volatility. It's going to be that much wider curve because you could have higher expected moves and a wider range of where the stock could be. So how do we find the expected move? If you guys have Thinkorswim, which I know a lot of traders use, you can just type in the name of your ticker symbol on the trade tab. So I did SPY over here. And then you look on the right side of the bar. A lot of you guys don't necessarily focus on this end. A lot of you guys look at the dates and where to set your strikes. This is a really useful information over here. The plus or minus numbers represent the expected move of how far up or down it is likely to end up at within that range. So SPY, when I took this picture, was at 409 and change. If you look at, say, 12 days from now, so about April 21st, it's expected for SPY to have one standard deviation move, so we got 68% chance or so, to be about 10.7 higher or 10.7 lower than the current 409 price, okay? You also notice as you get further in time, these expected moves more because it has more time to make those moves into the up or down places, okay? If some of you guys use Tasty Trade, it's the exact same place. You type in your ticket symbol on the top, looking at the option chain. On the right side will show these expected moves. And they're usually very, very similar, but not identical. Little weird reasons why. I think they have to do with implied volatility calculations. Might be slightly different, but they're usually very close within like a number or two up or down that price, okay? Again, more time for any other questions if anyone has any.
Yeah, so far nobody has any questions. Hung Vu is saying I came in late and missed out most 10 minutes. I don't think you missed too much so far. I mean, basically setting the stage here for the basis of these iron butterfly trades.
Yep.
We're going to talk about that pretty soon, right? So it's just setting the stage here for the underlying concept behind these trades. They're typically only, 30, 40 days doing pretty much nothing and making 10, 15% just sitting there. So this may seem a little bit like abstract, but like keep watching, guys. I think you'll be surprised, where this goes. Just trying to get the underlying ideas here. So there are a few questions coming in right now. Tom is saying the expected move is one standard deviation. Is that? Yep. One standard deviation.
Yeah, so about 68% chance that it'll be above or below where the current price is, which is a good probability that we want to work with. Not every trade is going to be 100%, but if we could get a good, over 50%, and 68 is a good percent to go with. I usually go a little higher than that, as you'll see shortly. That's a good range that we're going to be working with shortly. Yeah.
And don't worry, guys, I'm going to post a link very soon to kind of the notes of this. So if it's kind of not completely clear right away, don't worry, you'll be able to reread through it as we explain it more and more. Here's another question. James is saying, you said a percentage of the what? So
percentage of the what?
You said a percentage of the what?
Not really sure what the question is. So if you look at, say, SPY, it's at 409, and there's a 10 expected move. There's about a 68% chance that it'll be 10 higher or 10 lower than that 409 price, if that makes some more sense.
Randy, how's it going, Randy? Hope you're doing well. I noticed your comment in the Bullseye Trades Discord earlier. Kind of interested in that. But let's talk about this first. Where did you get that list from, Randy's asking?
The list of the expected moves?
I think so.
Yeah, it's directly on Thinkorswim. So again, I'll open up Thinkorswim right now so you can see it. So here's a trade tab. Let me type in Coca-Cola KO, for instance. So it's at 63.46. Let's say we wanted to know the expected move about 32 days from now. 32 days from now, it says the expected move is about 2.5. So it'll be 2.5 higher or 2.5 lower than that 63 price. Okay.
And James is asking expected move or implied volatility.
It has to do with the implied volatility. So the implied volatility is a percentage chance of how much the underlying will move in a year. So if you look at KO like a month out, the implied volatility column will say, 30%, 40%. That's essentially the percent chance it's going to move to that much. It's very similar to expected move.
Cool, yeah. And so James is saying, yeah, the 68%, you answered it. Thanks. Tom is saying TradeStation also has it. Randy's saying, yes, I'm sure, but anywhere. Thought you mentioned it a site. Okay, cool. Yeah, so I think everybody's like, yeah, they're holding up better than I am, that's for sure.
I'm pretty sure Google will actually say it too. If you just type in expected move of, then type the name of the stock, it'll probably tell you it. Yeah, it's pretty readily available in all brokerages.
David's asking, does Webull have a similar tool? I don't know. Do you know off the top of your head?
I'm not sure off the top of my head. It might be there, but I'd have to double check it actually.
Miriam's asking, if the expected move is a negative number, is that a downtrend or vice versa?
No, the expected move is essentially the cone of where it might actually represent. So we're at 63.5. If you go about 2.5 lower, so about 61.5 right here or so, I'll just do a little circle here to show. This is kind of like the down area where it might get that low. And then you go about 2.5 higher than that, so 65.5 around here. Draw another little circle. And now just imagine that I had a cone that expands outward from these points. It's not going to be a straight line because as you get further out in time, it's actually, I don't want to get too advanced there, but the expected move will be based on like derivatives of it. But you're going to see a curved line go out from here into these points. There's not really a downtrend or uptrend with expected move. We're just looking at probabilities of where a stock might be from the mean and from the average. Yep. So you could almost think about it as like here's the top of the curve. And then this is one standard deviation in the upside. This is one standard deviation on the downside.
Cool. Yeah, it looks like there's a lot of people that fully understand this, which is awesome.
All right, good. All right, so let's show how I'm actually using these things.
How do we the questions coming in here, man? Like,
okay.
Quickly here, what platform like TOS or Tastyworks do you recommend or do you use for this?
I use both, actually. I use Thinkorswim for stocks and ETFs, and then I use Tastyworks for futures. Futures have lower in commissions, and they're both pretty good programs. I don't have any problems with either of them. But the commissions, you save quite a bit of money if you use Tastyworks for it.
Yeah, so Hung is asking, will there be a discussion about the alert service in this live session? Yeah, so the idea here is we're hoping to go through the strategy and then give you guys a strategy guide on what Lance is doing. Lance is in both Sidekick Traders and Theta Traders. Obviously, the main one is Theta Traders. That's what we're kind of talking about. There's going to be a discussion about the alert service as well. We just kind of want to get to the meat of this and kind of go through this interesting new Iron Butterfly strategy that he's implementing there. So there is going to be discussion on that as well. Yeah, for sure.
Yeah. Any other quick questions?
Nope, think we're good. Sorry.
That's okay.
That's good.
All right. So where do we place our trades? The two main ways that we're going to place our trades is selling it a little bit outside the expected move. We want to get our percentages a little bit more in our favor. It typically ends up being around 0.15 delta in many cases. Not necessarily every case, though, because sometimes you have skew to certain sides. Or you can even go twice the expected move. You want to be even safer, and that's around 0.05 delta. So the reason why we do this is there's a good chance that stock price won't reach the edges of the expected move and past it. And then if you sell options a little bit past that expected move, those options will be worthless at the expiration. We'll be able to keep literally 100% of the profits if we waited until that end of the expiration. However, looking at a lot of data, and Tasty Trade does a lot of research on this. If you ever watch the Tasty live sessions, definitely recommend looking at those. It's a good idea in many cases to buy back your options at around a 50% profit. So we're essentially using that expected move to make good ideas of where to make our strike prices. But then when it goes in our favor, we like to get out of them at 50% profit because many times we don't stay in the trade for 50% of the actual expiration. So if you do, say, a 30-day trade, you could usually buy back at 50% profit anywhere between 20 to 33, 35% of the time in a lot of cases. So that helps us use our money more effectively. And then you actually get a bigger overall return because you're doing more trades in that time period. Okay.
Sounds good.
All right, let's go over this iron butterfly I've been talking about. So iron butterfly is essentially where we're going to be looking at a point down here where if you go past it, you could lose a little bit of money. Same thing on the upside. Go a little past it, you lose a little money. But we're going to be using that expected move to make our profit targets. Okay. Essentially, we like to sell expected moves either right at, sorry, we like to put these corners right here of this chart either right at the expected move or a little bit past it. And usually for, say, XPX, which we mostly use it on, we're going like 1 or 2 points past it because then we have a good chance for the maximum profit. So an iron butterfly, essentially how to do it. I didn't put a slide on that one. Let me show you how on Thinkorswim directly. If you have XPX here, let's say we wanted to do an iron butterfly at around a month out, 30 days out. Expected moves about 159, let's say about 160 points. So that means there's a good chance it could go 160 above or 160 below it. To sell an iron butterfly, we are going to sell pretty much an at the money put. So 41.51 is the stock price. We're going to sell, let's say, the 41.50 put. We're also going to sell a 41.50 call. And that ends up being pretty much right at the money, the peak of that triangle we saw in the previous example. And then we want to actually give ourselves some protection here. So if we're about 160 away, we want to go 41.50 minus 160. And around 39.90 will be where we want to buy a put. I would probably go 39.80, give a little bit of cushion, a little bit more wiggle room here. We're going to buy this put option. And then in the call option, we'll do the same 41.50 plus the 160. That's your expected move. And we're looking to buy the 43.10 call option. So we don't have a 43.10. 4300 is close enough. And we would be control click and buy. And then we made essentially iron condor, but it's more well known as an iron butterfly. Let me see if I did it right. I got to get rid of other positions real quick. Analyze trade. And then you see this nice little butterfly triangle. And then these are essentially the wings of your butterfly. Okay. Any quick questions at this point?
Not so far. We're just James and I are just talking about how great Theta Traders is.
All right.
So yeah.
Let's go over a little bit what could happen in this trade. So right now, right at the middle, pretty much 41.50 is like right here. If SPX made a very dramatic move tomorrow at 418 and went all the way to say 4,300, we would be down quite a bit of money because we sold these options and the premiums will be a lot more on one side, right? So if you take a look at this purple line, the purple line as you get closer to the expiration is going to start matching the green line. So every day that we're going more and more, we have this big cone that's increasing our profit levels by the time we get to that expiration date. And then right at the expiration date, it lines up perfectly with the green line. Okay.
Yep.
So as you stay in the trade longer and longer, there's less time for that stock to make a certain move dramatically in the up or downside. And that's why we're getting this cone-shaped figure that gets to the green line at expiration. Okay.
That's great. So James has a question here. I'm just going to put it up here. If you have both sides covered, what makes it go negative so fast? This is already above my head.
In a longer data trade like this, that's not going to happen very often unless you had like a 2-3% move literally the next day. But what we're about to show is we're doing these iron butterflies at 1 DTE. So there's a lot less time for it to move. You could imagine this purple line starting like this when we enter the trade. And then in the morning, the day after, it could look around there, for instance. And then maybe an hour after, it would look something like this. And then as you get closer to the end of the day, it will get closer to that green line. So if the actual move happens pretty quickly, you could possibly be in the negative when you first start the trade.
So his general question is, what is the biggest risk here, I guess, is the bottom line.
Yeah, biggest risk is if you get a big dramatic move, either in the upside or the downside, that goes farther than the expected move happens. Now, this could happen about 30% of the time where we're going dramatically higher, dramatically lower. We're not going to be placing these trades every day. Obviously, if there's like a big news event coming up, we're not really sure which direction the prices might move, but we're not going to enter in those specific days. We want to enter in days where there's pretty low implied volatility, pretty good chance that we're going to stay within this zone of profit.
Man, this is crazy. I feel like got my PhD in physics and I'm still struggling to understand this. Like, you're doing a really good job explaining this. People seem to be understanding it. There's a few questions here about can you make these types of trades in a Roth IRA?
Let me unshare so I can see the screen here. All right, you guys can see me. All right.
Can you read the comments?
Do these in a Roth IRA. You technically can, because you have a defined risk. You would have to do it on Tastyworks or Tasty Trade. I forgot the name. They keep switching their name. Where as long as it's a defined risk trade, you could. If you just sold an at the money call and at the money put, you couldn't do that in a Roth IRA because you have a possible infinite loss, and IRS rules won't let you do that. Like, I'm not personally doing these in the Roth IRA, but you could do them in a Roth IRA if you wanted to. And definitely Tasty Trade for that one. If you join Theta Traders, I could send you information about how to set that up and how to get approved and all that.
Yeah, and we're definitely going to have a link in a couple of minutes. We're just kind of trying to get through this. This is awesome, though. The participation here is exciting. And it's really
the question. You guys are more active than my students. They just want to be on their cell phones, just not even asking me anything. I like to hear questions constantly.
Yeah, loads of questions. This is great. This is such great engagement here. So Tom is asking, how far out are you doing the trade?
So we are doing these trades in the 1 DTE. We're typically entering the trade right before market closes. And then we're waiting in the overnight session. And then the morning after, we're usually getting out pretty early, right as the market opens. That's how we found to make pretty dramatic returns in a short period of time. These could be used for longer days. So you could use them in 21, 30 days. In a lot of cases, you got to be careful with implied volatility moving dramatically in that time frame. So that's why it's not as preferred to go really long days out on these necessarily. But it could be used as a strategy, especially if implied volatility is relatively stable.
Yeah, loads of questions here. This is awesome, guys. This is why we do these webinars to get these types of questions. So Hung is asking, what's the best alert to follow? I'm not capable of making multiple trades a day. So in Theta Traders, there's like 5 to 10 different strategies, really, like 5+.
Yeah.
And so this is just one of the new ones. And if you want to see all the old ones, just visit thetatraders.com and you'll see all the different variations of the strategies.
Hung, I was actually messaging him privately earlier today about it. We do a lot of the longer dated trades too, like 30, 40 days, 45 days out, where you can enter the trade anytime within the few hours after I give it, or even enter it the next morning and still be perfectly fine to get into the trade with the very similar results that we'll get. So at Theta Traders, we do a lot of different strategies. You're not expected to do every one of them. As you'll see, and as you stay with the program, certain type of strategies might be more for your benefit, and then some others you may not necessarily want to do, and there's nothing wrong with that. Like, a lot of members do really well keeping it really simple. Right?
Yeah. So can you see all the questions?
Yeah, I can see them. Planning to review the trade I placed. Yeah, I'll do a quick review of that when we have time later today. I was going to go over the weekend trade as well shortly. Cost of the trade, we're about to go over that. How do I close the iron condor? Essentially, you do the opposite. So let's say I did this trade here, confirm and send. It would be in my monitor tab. I don't know if I have any open trades. I might have one. Let's pretend that this was the iron condor or iron butterfly. You just highlight both trades, right click, create closing order, and then close the trade at whatever the target profit would be. But we do go over a little bit more advanced strategies and where to close them at when we're at 30 traders.
You know, you're not sharing your screen.
Oh, I didn't share that. It's hard to remember. I'll share it real quick.
I'll add it to the stream one sec. All right, add to stream. There we go.
All right, so let's say I had this, pretend this is my iron butterfly in the monitor tab. Highlight the trades, right click, create closing order, and you'd buy it back. So if the trade was working with us, if we're inside that triangle, this number would be a lot smaller than what we entered the trade for. So we're typically taking in about $1,600 to $1,900 in premium. And then let's say you can buy it back at say $1,500. So then you would see the price that it's available for there. All right, Russell, you want to say out the questions because I'm still sharing my screen. I can't see.
Yeah, there's a lot, so I'm trying to keep up. Aaron, how's it going, Aaron? So asking, what's the average return, and do you have regular time in the afternoon to get in?
Average return is hard to say for now because we're just starting the strategy out. This particular strategy, you would need to be available within about 20 minutes before market closes to enter the trade. We're looking at possible ideas of doing this with futures, but that's a wait and then I'll find out more information later answer.
Yeah, and this isn't even mentioned on the Theta Traders website. So if you go to thetatraders.com, you'll see a dozen different strategies that Lance diversifies across. You can pick one or two of them. This is the latest edition, which I think you're only offering to like lifetime members, or like what's your...
Yeah, we're going to do lifetime and yearly for these because it does take a little bit more work and I got to do it with pretty quick timing.
Yeah. So it's yet another awesome addition to the already amazing arsenal of Theta Traders.
Appreciate it, Aaron.
Another quick question here. Could you take your 0DTE SPX trade signal and show how to set it up on TOS along with stop loss or OCO? That's probably not appropriate to do tonight, right? Because we're not really focusing on...
Yeah, I don't think I'm going to have time to do that, but I could do that with you one-on-one if you're a member already, or I could do a quick video in the future on that.
Okay, cool. So they're starting to see other questions here, which is not too surprising. We're starting to see this overlap. Since you joined Sidekick Traders, Kim and Hung are asking, are Theta Traders and Sidekick Traders the same? Nope, they're completely different. So Sidekick is something I started in 2020, buy-side options only. And then Lance has recently joined Sidekick Traders to help out with managing the buy-side, but also some sell-side stuff. Theta Traders is the dedicated original Discord that Lance started, 2 years ago now?
Mm-hmm. Yeah, about 2.5 now.
2.5, yeah. Crazy how fast time goes.
Yeah.
But so thetatraders.com is it's dedicated purely to sell-side options. So crazy cool strategies like iron condors, iron butterflies, selling cash secured puts, all these conservative, low return but high probability strategies that Lance has really made a lot of money doing. Sidekick Traders is more of my sort of baby from 2020, where we're selling options, buying options. This is totally confusing. So they're quite different, but they're complementary in a lot of ways. And I'm really glad that Lance has become involved with Sidekick Traders as well, because he has good risk management strategies basically built up from the sell side of things, right?
Yeah.
So you've been a lot of help with managing and helping out with that. So
yeah, a lot of the trades we do, I actually subtly put in a few sell side strategies in
right.
that you may not be aware of. But it does make them safer.
Yeah.
All right.
So Josh is saying futures. Yeah, so we do futures and Theta Traders as well. Like, this is crazy. Again, I'll post the link for Theta Traders so you can see the awesome. I'll just post it here, thetatraders.com. So this is if you go there and you look at the table of contents, like it was put together really nicely. and it's showing like all the strategies. And this strategy we're talking about tonight is like an extra one. So Lance over delivers. This is the crazy part. It's really 10 alert services in one, and you can pick which one suits your schedule and your particular trading style perfectly. And maybe it's this iron butterfly strategy, or maybe it's 0 DTE SPX spreads. Like you don't know until you try it out and figure it out for yourself. So
it's like when I went to all you can eat sushi over the weekend. You don't need to eat every sushi. If you really like one type, you just get more of those.
Right, exactly. So yeah, it's pretty awesome. So where are we at? Are you going to talk through your recent trade over the weekend, or
yeah, and I'll answer this with Miriam's question about how to manage it.
Okay,
I'll do that. So let me just finish this up real quick. Wrong one. Okay. All right, so this is a few of the trades that we actually did with this iron butterfly. This was over the weekend. Iron butterfly, we essentially SPX is at 41.30 and change. We sold the 41.30 put, sold the 41.30 call, essentially right at this top of this triangle, and then we made it a 30 with wing. That's right. The wings down here is 30 away from the top, and we bought the 4,000 put and bought the 4,000 call. And it was at 19.65 at the time was your expected move. So even though the expected move was that was our premium we received. So we took in $1,965 on this trade. It uses 3,000. Your max loss theoretically was $1,100 on this trade but we're getting out of the trade really quickly, and you're not going to hit that max loss. Expected moves at 27.7, so we went a little bit outside of that cone of range. So we went to 30. And then on Monday morning, which was this morning, we essentially sold it out. So this is the trade we entered. It was about 2:30 in the afternoon, Central Standard Time. Took in 19.65 in credit. This morning, right at market open, literally at 8:30, I got out within the first minute of the trade. We bought it back for $16.45. So took in $1,965, bought it back for $16.45. That's over a $200 gain just over the weekend. And we didn't have to worry about what happens the rest of the day. We got a really good return. It was about a 12% return on our money in literally the weekend. I also do if we have time, I can go over covered strangles and how I use it too. Just really quickly, in a covered strangle, this is another strategy we do for lifetime and yearly members in the futures market. I did this trade that was right outside the expected move on 403. Sold the 3,900 put. This was right outside expected move. Sold another put below that to take in more premium. And we got 43.50. It's a 5 multiplier, so about $220 in premium we took in. And then just Friday, this was Friday, not today, we bought it back at 19.25. So we got over a 50% return, and it was about 12 days in the trade. So that was a really good return as well. I did a quick drawing of covered strangle right here. I don't know if it's still here anymore, actually. Let me look. The 3-month chart. Yeah, I think I lost it. But essentially, the stock was around. Oh, it might be an MES. 1 second. Oh, there it is. So my trade was entered pretty much right here on the 3rd. The expected move was 168. This is actually this is a current trade we just did today, actually. Current expected move is 168. This is the expected move strike price, and we sold the put below that. So we're expecting it to stay here, go up, go down. Very unlikely it's going to go beyond that expected move. And we're taking in really good returns on these covered strangles as well. So you could use a strategy with expected move, not only in the iron butterfly, but covered strangles, selling puts, credit spreads, pretty much every strategy that we look at. And that was all the slides I have available. So
cool. Yeah, let's chat about a few things then. So people have been, you can probably see some of the questions now. Let's see. Thomas saying, shouldn't you have bought the 4160 call? Maybe you can tie that up with where
for the one from the other day. Let me see where I was at. 4160. No, I went 30 away. Yeah, you're right. It was a 41. It was a 4160. I just typed it in wrong, but I actually entered the trade that way. Yeah, you're right, Tom. Good catch on that.
Cool.
It was entered right when I posted the actual trade alert.
Cool.
Kim says, did you say trade 0 DTE at the last 30 minutes? We're trading 1 DTE, not 0. So we're
Yeah, it's becoming
next
confusing. It's becoming confusing because of the different strategies in the different chat rooms, right? So
yeah.
So
If you saw the 0 DTE the last 30 minutes, that would be dramatic moves and it'll be really hard to manage it.
yeah.
What we're essentially trying to do is take advantage of the overnight volatility, and we don't want dramatic moves in the futures.
Yeah.
Excuse me.
Very good. So do you guys think you understand this iron butterfly? I think you're doing better than I am if you fully understand it and appreciate it. I think it's something I have a hard time with. I've always had a hard time with these sell side strategies. The more complex iron something or others, condors and everything, something I've always had a hard time with. Luckily, Lance is like really on top of it. So
yeah, and as members are getting used to doing these trades, feel free to send me DMs and you can send me your screenshot. Make sure that you enter the trade in right and where to actually take out profits.
Yeah, for sure. And I think that's something that I really like about what you do is like you really help people individually in these trades, which is pretty good.
Yeah, Josh brings up a good point too. This doesn't count for pattern day trader rules. So you can enter these as many times as you want, and then the next day close them. That doesn't count as a day trade because you're in 2 different days. So this is very good for small accounts that are under 25 grand. You could do these every single day if you wanted to and not have any pattern day trader rules involved.
Yeah. Michael's asking, how many contracts do you sell and buy back on average?
Well, that depends on the trader and how much their funds are, and there's a lot of factors involved there. I'm doing 1 or 2 contracts for now. Depends on your risk tolerance and how much you're willing to actually use in different strategies. But I do pretty much every strategy that I give, and there's like a big smorgasbord of them. It's hard for me to do 20, 30 contracts of every strategy.
Yeah.
One day, that's my first world problems hashtag. But I'll do a lot of these trades just to make sure that I could not only see what's happening with them and it's good returns in my end, but I could help out other members. Not only see what's happening with them and it's a good return. I think I got a mic thing there.
No, it was me. It was me. Okay. I switched over to thing. Yeah, so what I was thinking about doing now is like we could put up the thetatraders.com website and just kind of go through because a lot of people watching this are already in it, but there's quite a few people here that probably have no clue what we're talking about in terms of all these different strategies.
All right, I'll share my screen on this.
Yeah, and we can just talk through like because it really puts into perspective the value that you're offering subscribers when you realize, okay, I'll just share this now, that just like what we're talking about here is one fairly advanced option strategy, right? Like this is not simple.
Yeah.
But there are about 10 different strategies that you actively teach and trade and help people with every day in Theta Traders. And I think it's worth just going through them and just saying, hey, this is kind of thing, just to bring people up to speed that are maybe not.
Right. So we have a lot of beginners in the group that barely know what an option is, up to pretty advanced traders. And for beginner traders, I usually handhold them a little bit more. And we usually start with the simplest strategies. Usually it's a cash secured put on a pretty stable stock, just to see how you actually make money on it. And then as they're going through it, they're used to the cash secured puts. We might enter a longer dated credit spread. Then they see that strategy and maybe they like that one more. Maybe they like the original one more. So that's why we're giving all these different types of strategies because, you're different and you're you. So you have your own risk return preferences. So as you see all these strategies, you can suit it based on your allocations. And I actually will help with some basic thoughts on how much to allocate into each strategy once you're pretty comfortable with a few of them as well. So don't worry about these prices. We're actually going to give you guys a little deal for watching tonight. But this is what we actually offer. We're going to focus on the annual and lifetime here. You get put credit spread alerts. So every day around lunchtime, 12:30 Central Standard Time, you'll get a longer dated put credit spread where we're selling stuff way out of the money, very high probabilities, usually getting 2 to 5% returns. You also get one cash secured put every same exact time during lunch. And these are for just selling a put. You might want to own those shares and wheel them and get money on the call side as well. You also get 0 DTE SPX alerts. Those go around 9 o'clock in the Central Standard Time, where we're essentially selling either a put or call credit spread or both with an iron condor that will expire that same day. We do even longer 3-month SPY alerts. Some people really like these because they can enter these trades literally a few days afterwards, get pretty much the exact same premium that we're getting, and then just set it and forget it. Sometimes you can hold these a month or 2 months and then still get your target profits. We do monthly group Zoom calls. Every month we'll go over one of the strategies, like an expected move strategy. We leave it open for Q&A for individual members and just talk about different positions, what might be good in the future and whatnot. There's a bunch of strategy guides. I've written probably 3 or 4 full-length novels worth at this point, and you'll be receiving all of those. It goes over in detail every type of strategy that we do. Get one-on-one coaching. If you're a yearly member, just me and you talk. Could go over any type of strategies that you want more detail on. If you want to go over your asset allocations, if you want to go over why do I close at a certain price, how to manage them, how to look for different trades. It's really whatever you feel like you need help on. For yearly, you get that one time a year. We have someone unlimited that use it as many as they need. There's some members we chat every few months just to see how the market's doing, see if they're reaching their goals. And as much help as you need, you can do in that unlimited time. We also do future strangles and covered strangles using MES futures. And those are one of my favorite strategies right now. You could use span margin to your advantage and get a lot of money on your buying power. You also see all of my buy and hold funds. I have a Roth IRA, wife's Roth IRA, and I'll say anytime I buy a stock that I plan on holding for a long period of time. We'll do smaller group monthly Zoom calls in the yearly and annual. It's a little more tight-knit community. Going over psychology of trading, why do we enter a position, what do we do if it goes against us, our thought processes behind it. For lifetime, you get portfolio management and some basic thoughts on how much you should allocate to each type of trade. We're doing gold trades where we're selling futures on gold contracts, doing crude oil with CL futures, and we're even doing commodities with grains like corn and soybeans and whatnot. So it might sound a bit overwhelming in how much you actually receive, but I am here as a teacher primarily, and I want to make sure that you're comfortable with a certain strategy that suit your needs, and then I can help you out with understanding why we do the trades we do. And as you feel fit, you could possibly test out one more or a few of them and be a full-time trader if you want, or you could be more of the, just set it and forget, just do one trade every few days or so, and you're happy with what you got.
Yeah, it's crazy. I mean, you basically give probably 10 services in one.
Yeah.
And then the mentoring part on top of it, pretty much for free when you think about it, like when you throw it in. So, yeah, lots of questions. Want to make sure that you guys get the webinar offer though for yearly and also for lifetime inner circle. So if you browse through the website, you'll have seen exactly what Lance is offering. I think there's a lot. And so the idea here, though, is that, we can take a significant portion of that cost and reduce it down to what's basically a total bargain. Like, it's ridiculous. Mm-hmm. I mean, one guy I used to work with was charging $3,000 for like a fraction of what, Lance is offering here. One guy I know is doing SPX. He's a famous guy, relatively well known, David Shaw. He wants $3,600 a year for one of Lance's strategies, and Lance has 10 of these for half of that. So, like, this guy, and this is why I love working with Lance, is you won't get a better deal in terms of sell-side options than I've ever seen. And I've been doing this for a decade now, looking into these different services. So if you want to join, I'm going to post a couple of links. We have a few different options for you to come and check it out. the first one is pretty straightforward. You can go to thetatraders.com and just join on the trial. That limits you, though, in terms of what you actually get access to. So some of the better options here would be the link I'm just about to post, which is for the Inner Circle, which is everything that Lance has to offer, including one-on-one mentoring, which by itself is ridiculous, right? So here is the Inner Circle link. If you go and click on that, you get lifetime access to everything we've just talked about, everything on the website. Lance pretty much nonstop Zoom if you need it.
Yeah.
I hope I'm not causing you problems there.
No, I'm definitely helping out members that need it.
Yeah. So just a ton of stuff, really. So that's the first link. If you want a payment plan, we can also post that for you. You can split it into 4 payments. That's usually what people are doing. We've had dozens of people splitting the Inner Circle lifetime into 4 payments, dozens and dozens over the last few months. It's been ridiculous. People have been upgrading from the regular membership. So it's something we do like to offer. If you're currently a member of Theta Traders and you want to upgrade to get all the extra trades, like the commodities, like the gold, like the oil, and all this stuff, we can also do custom deals with you on that as well to get you into that. So, yeah. We also have a yearly. Can you explain briefly what the yearly includes? I'll post
So yearly gets a lot of what the lifetime get. You do get 1 Zoom call with me. You could also DM me any quick questions anytime on our Discord where we do all of our chats and whatnot. And you get longer dated put credit spreads, longer dated cash secured puts, 0 DTE. You also get the Iron Fly strategy that we're just talking about. And pretty much everything except for the commodities, oil and gold, and not that unlimited help because it needs to have a little bit of free time sometimes. But so yeah, it pretty much has everything besides the lifetime without the unlimited Zoom calls and the commodities trades.
Yeah, definitely. And it's such an evolved service. So I've compared it to so many different ones. I've been in David Jaffe's services. I've been in Theo Trades, other competitors in the niche. Lance is excelling above all of these guys for a fraction of the price. And it's pretty amazing to see, and which is why I'm really excited to be part of this and helping out. Here's the payment plan. If you want to join the Inner Circle, which is everything we talked about, but you don't want to pay it all up front, totally understandable. Here's the payment plan to join with Theta Traders. You get all of the strategies on the website, plus the one we've been trying to talk about tonight with the Iron Butterfly. And Lance is always adding more, and that's the crazy thing. It doesn't stop. Like, all of these should be separate services, but they're not. And I keep telling him, look, start separate services. He's like, nope, want to give the value to people.
Well, I put my foot down on those, Russell.
So, yeah. So hopefully that's helpful. I really think this is one of, if you have significant capital, say 10, 20, 30,000 that you want to put to passive income generation, selling options with these different spreads, these advanced option strategies might be intimidating, but it's something that you really will benefit from, in my opinion, from learning from Lance personally. I think it's something that everybody should consider. Even you guys that are doing SPX scalping, 0 DTE and Sidekick Traders, take those profits, put them into something that is a little bit more passive, a little bit more conservative, and let that money work for you. It's kind of the thought process I have, at least.
Yep, definitely agree.
So do we have any questions? I'm just scrolling through now. I wanted to get those pitches out of the way just to make sure that people that want to get involved can get involved. Just looking back, did we answer Randy's stuff? You have X dollars.
So I have X dollars in my account that's not in trades. I do have some that are not in trades on purpose, so I could enter trades as they come in the future. How's that figure done without margin? The cash secured puts are completely cash secured. So if you sell a $10 strike, and you're going to need $1,000 for that trade, and I'm still getting my target 2 to 5% or so per month with a fully cash secured account. The futures trades you'll have to use some margin on. That's just the nature of span margin with these things. So if you're not comfortable with using margin, you can still do perfectly well with the cash secured puts. And if you're okay with doing very safe credit spreads, use the spreads we do are only 5 with, so $500 per trade to do it. And then that's pretty much all you need to worry about there. In terms of how to figure how much in cash to leave, that would be more of a one-on-one type question that I can answer for you based on what your preferences are and your risk tolerances. So I can't really give a clear one-size-fit-all answer on that one.
Yeah, and so Kim and Hung is saying David is 5,000 now. I'm guessing that's David's show because there's David Jaffe as well. I love David Jaffe. He's a good guy. I like him. I think he does well. He's overpriced in my opinion, and I think a lot of these services are, and that's really why Lance is awesome, because he's given this value for a fraction of what's currently out there. David's strategy, we've looked into that, right, Lance? We've looked into David shows. I think you say show, CHAU, show, right? I mean,
yeah, I'm not sure how to say it.
It was 3,600. He gives a money back guarantee, blah, blah, blah. But he's really just doing SPX overnight, 0 DTE. But that's all you get. And it's not everything it's cracked out to be from what I've looked into a little bit. And so this is the kind of value I'm saying. It's like Lance could charge 5,000 plus for some of these services, but he's being really decent about it. And I think that's what I really appreciate about you. So thank you for helping everybody out.
Like I think eventually when you are a more experienced trader, you don't want to just do one strategy and that's it. Like I wouldn't put all my money in 0 DTE. As you'll see, you want to leave your risk tolerances spread out, number of days expiration, different types of underlyings, different risks, in terms of expected move and deltas and whatnot. So that's what I personally do as well. And as you do these trades more and more, you want to be more diversified, I think personally.
Okay, more questions. This is amazing. I'm really glad you guys are so engaged here. Like, it's really good to see so many people turning out and asking questions and talking about this. Brian is saying, hi, is selling daily options in SPX less risky than selling daily SPY puts?
In terms of it being cash settled, you could say so, because you wouldn't be assigned 100 shares of SPX after, you went in the money. And you could get assigned on SPY and have 100 shares of SPY. I think that's probably what you mean. But it depends on where you're selling the strikes too. I mean, if you're selling a very, very low delta SPY put, that could be safer than a very high delta, like at the money SPX necessarily. So it's a little bit more needed for that question, I think.
Yeah. Well, and then before I forget, guys, we're going to share the slides, right? We're going to give you guys a link to check them out. So let me do this. So we put together like the expected move stuff. It's hard for me to comprehend it. I hope you guys have followed it a bit more, but here's the link to the document about the expected move, iron butterfly stuff. So if you guys want to check that out, that might help you in your own time to kind of check it out.
Tom said, when do I close the 1 DTE? As of now, we're closing it right at the open. If it hits our target profits about $50 or more. If it's at a loss, we're usually just closing it out right away. We're not necessarily reaching half our premium. You could do other strategies, and that's more of a one-on-one question we could talk about in terms of if you're able to manage it more actively during the day, then you could possibly do what you're saying. But we're trying to keep things relatively simple in all these strategies. And then as you're branch out and you're more advanced trader and you know what you're doing, then that's more of the one-on-one talk that we could talk about for that.
Yeah, and I think a lot of this stuff, you're pretty open to having people contact you and ask you more questions and things. I think it's something that you're passionate about and helping people with
yeah, this. Like we had Mike as a lifetime member giving me his rundown on a whole new strategy that he's doing with 0 DTE, and he just wanted my input on it. And I gave him my input. It was a very good strategy, and it could definitely work out. So, as people are doing these more and more, you might start to have your own type of ideas. And I'm a good sounding board, and I could give you my advice and thoughts on what are the good positives and negatives about those positions as well.
All right, more questions from Mr. Tom. So is the 1 DTE trade a credit or a debit trade?
Technically, it doesn't really matter. Like you could buy the debit and then sell it at a higher price, and then you're knowing what your max loss is right away. We're selling them as a credit spread to start. So we're selling the at the money call and put. We're buying the wings. If you did it the opposite way, you would actually want a dramatic move in the price. So we're having to sell them as a credit spread, but it doesn't necessarily matter because they're pretty much identical to each other.
Cool. Yeah, I think we're getting through a lot of these questions. This is crazy. So much.
This might be the most questions we've ever had in a live stream, I think.
Yeah, it's been a while since we did one. It's a lot of fun. I do enjoy this one. One thing I have, so while we're waiting for other questions from people, is there any sidekick traders people in here that are more interested in joining maybe joining Theta Traders, or talking about Goldman alerts that we've been doing in Sidekick for a while, just let us know. I know a few people were attending tonight and maybe thought that we were going to be talking about 0DTE, SPX, buy-side options. So I just want to give you guys the chance to ask any questions about that, just in case you're in here.
Got another 10 minutes or so. I think we're already past an hour.
Yeah, I know. It's crazy. So it's good. Yeah. Well, yeah, let's just see if any more questions come in. I'm just checking through the agenda here to see if there's anything that we've missed. So we've given out the expected move thing that we were going to share, like the slides basically, and the guide. So we've given out the guide. Don't think I gave out the slides though, right? We were going to give out the slides as well.
Yeah, if you want, I could leave you the link for it.
Yeah, I think you sent it to me earlier. And you made 12.6% trading that strategy over the weekend, right?
Yeah, because we sold it for 1965, bought it back for 1645. Right. So that was a $220 gain and about $1,000 needed.
Right.
Which is not necessarily typical every day, but it could happen for, especially if SPX doesn't move much in the overnight session, which it didn't move much for.
All right, we have more questions coming in. This is awesome. I love
it. Keep it coming.
Randy, again, let's see. So can this be used as a safer way to trade earnings?
Some people do this with earnings and they use expected move. There's a few other resources I would look at to see what the previous earnings were in the last few earnings sessions to try to get an estimate of what the expected move should be. And that's a good point. You can look at what the expected move is saying for the future and comparing it to what the previous earnings were. And if you see a dramatic difference there, there could be an opportunity there. I'm selling twice the expected move, and then selling like an iron condor twice the expected move, buying it back for a certain target profit is a pretty good trade to do with earnings if you wanted to.
Cool. More questions. Let's see. This one is about a payment thing. How long is the payment plan deal for? Most people would tell you the deal is ending soon. It's going to be gone. Lance and I take a different approach. I think we have so many people upgrading via the payment plan and things. I think it's such a popular service. We don't really have a hard deadline. You can just hit us up. We'll give you the deal.
It'll probably be around Friday or maybe Monday next week.
Existing members as well. One thing we do with existing members is if you do want to upgrade, just send Lance or myself a message and we can sort you out, put credit towards what you've already paid in Theta Traders. We really want this to be fair. Like, we're not in this to make millions of dollars. We just want to make sure that everybody's happy. So we're not going to put high pressure, like deals ending midnight tonight or anything like that, So
that is another important point that we do that most other services don't use at all. Like if you're a current member that's on quarterly, and we could actually look at how much you actually paid so far and use that as a credit for the total in your payment plan that you would want for it. Also, if you're a yearly and you want to upgrade to the lifetime, we could do the exact same thing. If you're still a little bit on the fence of joining, you could do the 7-day free trial and then see if it's for you. And then if it is, well, if you sign up for that free trial in the next day or two, we'll still honor this lifetime and yearly deals to see if it's really for you, and then we could work with you with that.
Yeah, exactly. Aaron's asking how much capital for the one DTE SPX.
It's about $1,000 in most cases. The one we did today was a little less. I think it was like $750 or so. It depends on how far your width is. So in a very far width strike, you're going to need a little bit more in funds.
So Randy is saying his internet crapped out for a minute right when you were answering that. What were we answering?
There's so many questions. I don't remember.
Kim's saying, wow, you guys are
question out again. We could probably help.
It's not that we're generous. So Kim's saying, we're generous. It's not that we're generous. We've used services. I've reviewed services for a decade. I've been an avid user, and Lance is just a really good guy. So like we don't want to do what these services do where they rip you off or whatever. So we need to make sure everybody's fairly compensated and everybody's happy, but like we also respect like what people are doing. I've purchased probably 50 grand's worth of services and reviewed them over the last few years. So And
I mean, we've
Lance,
had a lot of members that were quarterly members or even monthly when we did a monthly plan. And then they like it so much they upgrade to yearly and lifetime. And we're not going to be like, ooh, we get all this extra. Like, no, we're going to take what you already paid, use that as a credit. You know, we want to be fair to everybody.
I've never seen people do that. I've never seen people being able to upgrade like that, and it was your idea. And I remember thinking, like, this is great. That's fair. It's good. It makes sure that you get compensated for all the extra Zoom calls that you need to do, but people get value. And it's so far, I've never seen anything like it. The service has grown 50% in a few months, right? And in a market where most services are declining rapidly, people are being laid off across the industry in terms of, these big companies, they're laying staff off and things, and we've seen a boom on theta traders, and I think it's because of things like that.
And I like this almost like a business partnership. If you're a lifetime member, like we're both in it together for life here, so we obviously want to be making a lot of money. And I'm getting good ideas from other lifetime members. I'll be honest.
Yeah.
I'm not a one fits all encyclopedia in here. I think I'm relatively smart. At least I looks not as dumb as I look, right? But I'm still learning stuff all the time too. Lifelong learners, even as teachers.
Yeah, definitely pretty good. And so let's just review.
Okay, real quick on the earnings. So yes, you could use the earnings with expected move. I would like to look at previous earnings as well to see where a safer strike would be. And if you know that the earnings after earnings calls, the stock went on average like 5% up or down, you'd probably sell around 7-8%. So have a little cushion there.
Yeah, pretty good. All right, guys. Wow, that was a fast hour and 10 minutes. That went by quickly. Yeah. This is awesome. I'm so glad this is happening. So, any other questions? We can wrap up in the next few minutes. If you have more, though, it's probably best just to reach out to Lance. If you're in Sidekick, he's under Investing Teacher. And then what's another good way to reach you, I guess, is probably...
my email address at thetatraders.com. It's Lance K, if you want to put it up.
Yeah.
Lance K at thetatraders.com.
Yeah, so here's Lance's email. Lance K. I always forget the K at Theta. Okay. And I always say Theta. It's just the way I was raised, I guess, in the UK. Lance K at thetatraders.com. So that's Lance's email that I just posted there. So if you have any more questions for him, he'll answer them. I know what you're like. You'll just be like,
you could email me if you even want a quick Zoom call before joining as a member. Like I might be a little limited with a lot of new members this week, but I'll try to put you in a certain time period to answer any quick questions that way too.
Yeah, awesome. All right, guys. So I think you have the link to. I posted the link to the guide, right? So I'll just really quickly post the free guide for the expected move stuff. This is complicated stuff. I struggle with it. You guys seem to have a better grasp than I do of it. Here again, though, is the guide of what we were just talking about. Here is the link to Theta Traders. I wouldn't suggest buying through thetatraders.com particularly, though, just because we're offering the better links from tonight, which again, I'll just post really quickly here. So the inner circle, which is everything for life, forever. And Lance is dedicated to this. I'm dedicated to it. We're not going anywhere. Here is the one payment for the Theta Traders Inner Circle. Let's just put the payment plan, which people were asking about, and is super popular. We have dozens and dozens of people that have gone for the payment plan and seem to be enjoying it. Here's the payment plan. So yeah, those are the best deals. You won't get those on the website. That's why I'm posting them here. So, all right. Well, there's still plenty of people watching. It's been an hour and 10 minutes. We should probably wrap up. I mean, it's getting late here, especially if you're on the East Coast. It's probably getting to the point of going to bed to get up for market opens. So,
all right. Yeah. Aaron asked real quick. Yes, your numbers look right, but not every day will work because we're not going to get 100% win rate. But if you did get $50 and 5% a day, you could get 25% in a week. It's not going to happen every day though. But interested to see what the long-term expectancy is on that. And thanks for watching, Clayton, and everybody else that were here. Appreciate all your time and your questions. You kept me more active than I am as a teacher sometimes, because when I'm a teacher, I already know what my students are going to ask me, like, how do I find the molar mass of that? And then I'm literally just like knowing it without even looking at the periodic table. But you guys are keeping me on my toes with these questions. So
definitely. I know what you do, and I've been trading for a decade, and I'm just like, my head's spinning here. So it's definitely time for bed, I think. So hopefully you guys found that useful. Hit us up. Let us know, if you need any more answers to things. And yeah, hopefully the market continues tomorrow. We had a nice rally into the close today. So let's hope we can get some good trades tomorrow. Be good.
Yep, sounds good. Thanks everybody for watching, and see you guys on the Discord if you're already a member or if you're a future member. Appreciate all your time.
Sounds good, guys. Thanks. Take care.